Well, that's got to go through a process, and we'll see what happens. Netflix is a great company, and they've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him, but it's a lot of market share. So we'll have to see what happens. And when they have Warner Brothers, that share goes up a lot. So I don't know. That's going to be for some economists to tell, and I'll be involved in that decision.
That's President Trump on Netflix's $72 billion bid to acquire Warner Brothers Discovery Studio and its streaming business. Netflix facing a setback as it's hit with a class action antitrust lawsuit. An HBO Max subscriber argues that the potential merger would reduce competition in the streaming business. Paramount Skydance, meanwhile, launched a hostile takeover bid for its own for Warner Brothers, offering close to $78 billion. Joining us now to break it all down is Prairie Operating Company Executive Vice President of Market Strategy, Lou Basenese. Lou, good to see you.
Good to be here again.
Your thoughts on this deal?
Look, I'm with the president. It's a lot of market share. I would tell you this way. If Netflix prevails, this is the moment that Hollywood turns from an industry into an app, because everything would be completely owned by Netflix. The distribution, the content, both past and present and future, and more importantly, the algorithm. It's going to serve up everything that you know. Netflix's CEO obviously out there lobbying, making his case, and he points to an interesting metric saying, look, YouTube now has 13% of total hours watched in terms of content. If Netflix does this deal, they're only going to go from 8 to 9%. But again, the key distinction here, YouTube doesn't control the content that goes through that pipe. Netflix would. They're saying content is king, but they also want to own the throne and the castle. I just think it's a bad deal for consumers, bad deal for investors as well.
What do you think, Kevin?
Well, what I think is interesting is why wouldn't there be antitrust concerns if Paramount merges with Warner Brothers? I think they'd be getting even bigger. Paramount owns CBS. They have live sports. I mean, it's just pretty interesting that it's only being tilted towards Netflix, which doesn't.
Well, because isn't Netflix the bigger streaming player?
Yeah, but it's still a small portion of streaming.
Yeah.
When you look in aggregate, Amazon has Prime. You look at Google has YouTube. Yeah. I mean, it's unbelievable that we're only just showing it in one light.
No, I mean, in fairness, if you combine Warner Brothers with Paramount, they go to 14% of total hours, consumed by consumers, but they don't own the platform, right? I mean, you have to think about Netflix would go to 420 million global subscribers. I mean, that's bigger than the U.S. I mean, you start talking in meta terms where you have, half the population that's really online consuming content. So I think those are the concerns, but I agree with you. It's still an antitrust concern regardless of who makes the acquisition.
Well, the DOJ is going to examine whether consumers are going to face higher prices. So when you have 100%. A bigger, company, Netflix as well as Warner together, do they have the power to raise prices on consumers? It's going to be what's key point.
Look at the history of Netflix. They're absolutely 100% going to raise prices.
They've been raising prices.
The terms since 2007, the terms of the deal necessitate it too. If they're going to do this and consummate this merger, they assume $11 billion in debt. They got to take on another $50 billion in debt. That's going to hit their debt rating, so they're going to pay more to borrow. Guess who's going to pay that bill? It's going to be consumers.
Well, and content is king in this market, and they'll be getting key assets like Harry Potter franchise, which now they can build out and develop.
Absolutely.
I mean, there's a lot of crown jewels in this. That's why there's that bidding war. And then because you own the content where people's eyeballs want to go, prices are going to go up.
And if you own the content, the DOJ is also going to look at whether or not they're going to withhold or reduce the Warner content from rival video distributors. So there's that as well. Got to get your take on the broader averages and the markets here with the Fed day coming up. We're expecting a cut today. So why are interest rates higher?
I think it's kind of the sell the news event here. I think everyone's, for what reason, I'm not really sure. Can't put a finger on why they're worried about the economy, because every metric that I look at, we talked about it, earnings growth, the last 4 quarters has been over 10% for the S&P 500. Profit margins hitting 13.1% in the last quarter. That means companies have the ability to pay higher wages, which is what we need to keep up with still persistent, stubborn inflation in certain areas. So I look at all the metrics across the board, and I don't see any reason not to be bullish heading into 2026. But I think, like some other guests have said, there's going to be volatility along the way. I think what's most important today, not what the Fed does and cuts, is what they think they're going to do in 2026 and the projections we get for that. So.
And that's why Darius called it a hawkish cut.
Yeah.
Right? Because it's all about what Jay Powell says at 2:30 today in terms of what is expected in 2026, even though We're getting a new Fed chairman.
Well,
pretty soon into the new year.
Well, we're getting a new Fed chairman, and also earnings drive markets, right? And the earnings for January's season coming up is expected to grow 7.5%, and this past quarter was phenomenal. So, and that's against a backdrop where companies are investing in their businesses, and they've even signaled 2026 they're going to put more capital to work because earnings are doing so well.
Yeah. And analyst estimates have been historically below expectations, right? So they said 6% for the last 2 quarters. S&P 500 companies doubled that. So if we think it's 7% this quarter, it's probably going to be 12, 14%.
Yeah, and that's what markets are reacting to, because earnings are doing well and the backdrop is doing well. But Amber, I mean, markets are up in the double digits in 2025, reacting to everything that has been said this morning, and yet President Trump has to go on the road and sell this story about his economic policy.
So actually what I think is happening is that this is lingering concerns about the economy that have been going on for the past few decades rearing their head, because that's the only thing that people have to be concerned about. So it's housing prices and energy prices. It's those day-to-day expenses that people typically would consider part of the American dream, is being able to live in a single-family home and afford your electric bill, right? And because that's been simmering under the surface for so long, and now the economy is finally trending back in the right direction post-pandemic, people want to address those really underlying structural issues.
Do you see structural issues that need to be fixed?
I think affordability is the buzzword right now. It's because, look, no one's looking at the individual line item necessarily. They're looking at how much they have coming in each month and how much is going out. And on net, they have a little bit less. So that's why wages have to really increase. I think, yes, energy prices are continuing to come down. That's a relief. The big one for me, the structural issue, is housing. But the fix is not just lower interest rates. We need more supply. So it's not a short-term easy fix.
Exactly.
Well, healthcare's gone up too, as well as education. And so whenever people are spending money on their children's healthcare, their children's education, their mortgage payments, and so it's a whole basket of things. And that's real inflationary backdrop, not just this 3% we're seeing on the headline.
All right, we will leave it there. Great to catch up, Lou. Thanks very much. Lou Basenese here.